Well, welcome everyone. Thomas Montgomery Smart Money Alliance. It is Monday morning, June 8th, 2020, and just a hair before 8 o'clock a.m. Central. It's our pleasure to visit with you this morning. In some respects, this is part two of a two-part series. On Friday, we rolled out the Capital Ready Package version 2.0. And that 2.0 is really important because version 1.0 had been around for over a year, and we've enrolled a large number of clients, but frankly, we learned a lot about what worked and what didn't work. So we've incorporated that along with the input and constructive criticism of many of you, and we've rolled out version 2.0. We did a little bit of a soft launch on Friday, and I think we ended up with 23 or 24 enrollments over the weekend, which is great. I see Rudy on the line here. He had one on Friday. So we're off to a good start. I think we can probably keep a good steady pace of 100 or so per week. That's what we're planning for. So what we want to do today is to not so much reiterate the Capital Ready Package version 2.0 and its design, but instead really get into the roll up our sleeves and get to the roots of the matter in terms of your role and your rewards. So let's go ahead and dig in, and we're working off of the screen here, and we may pivot over to the website in a minute. So we'll start again just with a summary of the purpose of the Capital Ready Package version 2.0. I think you'll agree most small businesses want and need access to capital. And in many cases, many of them need more hand-holding than just a self-directed program. And so as we talked about on Friday, this is going to include a weekly support call or webinar with each participant to really actively guide them through the process. So I think that's going to help quite a bit. With that being said, you can certainly go to our website and see the Capital Ready Package description. There's a YouTube video there, and we may navigate over there in a moment. So 1A, certainly what we want to do is make a commitment, a contractual commitment that if the client enrolls, we're going to help them raise at least $100,000. As we talked about on Friday, that's not too good to be true, because what we're going to do is gather data, build a loan package, see what they qualify for now, have a goal of going after that first tranche or first round of capital within a 30 to 45 day window, and we'll get more details of that in just a second, and then continue to assist them in meeting the underwriting criteria of the sources of capital that best suits their mitigating circumstances to reach their ultimate goal. The 100,000 is the floor that we're contractually guaranteeing. It's not the max. So if they want more, certainly more can be available, but they have to meet the underwriting criteria. But certainly right here, as we've highlighted, 1A is going to be a very effective conversation starter. As you're talking to key influencers or even just individual small business owners, when they know that there is a legitimate and guaranteed program to help any small business owner raise at least 100,000, they might be skeptical, but they're going to be interested in hearing you out. And so this is important training, so you're able to give them a proper description of the program. What we want to do is create a tangible deliverable within the first 30 days. Now, I know, and you know, the goal is funding. The word deliverable sounds kind of fancy. What they really want is funding. But what you and I know that most people don't know is we need to have the loan package first, then we apply for funding. If we have a well-developed loan package, then we know what the right source or sources of capital are, and we're much better positioned to meet the underwriting criteria. An increasing number of lenders do not even want you to apply if you can't attest that you've already put together your loan package. So it's not us just being clever and saying, oh, let's develop loan packages for everyone. It's the right thing to do. It's really the first step before we go apply for funding. So with that being said, in that 30 to 45 day window, we should be applying for their first tranche of funding. Now, again, we all have to be realistic here. Someone could come to you, and they've certainly come to us, they're looking for $7 million in the next 45 days. Well, okay, let's put the loan package together, figure out where that $7 million should come from, and let's see if you qualify for that $7 million. Because if not, we might have to start with a smaller amount. You may not qualify for $7 million yet. That's the reason for the loan package. So we always have to be very transparent and explanatory to our prospects and to our clients. Yes, if 7 million's the goal, that's great. We can only guarantee 100,000. But if 7 million's a goal, great. We would all love you to get 7 million. But it starts the same. We need to put the loan package together. And again, the first tranche of capital we want to pursue within the first 30 to 45 days. Now, it may be for some clients that we can accomplish their complete capital raise goal in that 30 to 45 day window. But you know as well as I do, there's going to be some folks that come to us, come to us, and they're not fully qualified for their entire capital raise. So we'll get what we can quickly, but there may be work that needs to be done. We may need to help them improve their business credit profile, for example. Their Dun & Bradstreet Paydex score, just as an example, and that of course is included. And so that gets to the point of 1D, is that while 1C is let's get the funding, and we're talking about business funding here, a business loan. What we prefer not to do is go chase after a personal loan. We want to pursue business funding under the EIN. So I should have made that clear in 1C. 1D is, okay, now let's continue to work on whatever deficiencies that may or may not exist that's preventing from the end goal, the end capital raise goal, because they may not have everything in order. That doesn't mean that we don't want to get them some funding quickly that they do qualify for on C, but it's too good to be true to think that everyone's just going to come to us and they're immediately available or qualified for all the capital that they want to need. There's usually going to be some work involved, and that's on our part, not on your part, but you're seeing the process here. So again, guaranteed $100,000 regardless of time in business or personal credit scores. Get that tangible deliverable, that loan package put together in the first 30 days. I'm going to break down key milestones for that in just a moment so we're all on the same page. Our goal is to get the first tranche of funding in 30 to 45 days. And then we continue after that first tranche of funding, start working on other elements necessary to build their credibility for the larger capital raise. And as I did mention before, we want, whenever possible, to pursue business funding, business loans, those that fall under an EIN. Okay, so that is a quick review of the structure. Now let's talk about what's in it for you. So in terms of what's in it for you, the branch compensation, you're going to collect, regardless if you're a branch manager or an affiliate, you're going to collect the $2,500 up front. As we talked a little bit about on Friday, if you want to offer some flexible payment arrangements with your clients, that's okay. So you could either discount it by $100 or $250, by $500, you can give them a $1,000 discount if you want. You could frankly discount it all the way down to $1,250, which cuts it in half. Or you could collect half up front and then set up a payment plan for the rest that might even have some sort of interest charges or additional fees if that's what you and they work out. It's really pushing the decision making out to the community. So you're able to work with each individual small business and figure out what's best for them to get them plugged in. Now, you're going to also earn 5% of the capital raise, and we know that's at least $5,000, don't we? Because if we're going to raise at least $100,000 for the client, at least, and you're earning 5% of that, 5% of 100,000 is 5,000. So again, we're not talking about all the sequential processes, which we're going to get to in a moment. We're talking about what's in it for you. So you've collected $2,500 up front, unless you chose to discount it. You're going to earn 5% from the capital raise. Now, that's not going to be necessarily upfront. That's going to occur as the client raises capital. Our goal, as we mentioned, though, up in 1C is get their first round of first tranche of funding in 30 to 45 days. So that's when this should start to kick in. And during their initial 30-day period, when we're putting that loan package together, we need to go ahead and build out what's called their collateral assignment, their key person policy. So what's awesome, and it's highlighted here in yellow in D, is you have 3 revenue streams that we're essentially splitting 50-50 with you. So of the $2,500 refundable deposit, which we refund, it doesn't get charged back to you. You don't have to give up your half. You're making $1,250 and we're making $1,250. Again, if you want to discount your side, you can. Secondly, of the 9.5% performance fee that the client's paying, we're frankly paying out a little bit more than half to you. You're making 5%. And as a branch manager, and if you are a regional director bringing branches on, you're making a 1% override from that, which obviously puts us far below 50%, but that's okay. And then on the key person policy, by default, we'll split that 50-50 because it's kind of fair, right? We're splitting everything else 50-50. However, if you want to write through the hierarchy that we've set up, then you would earn the full 100%. But essentially, it's a pretty awesome proposition, right? Let's go help small businesses with a guaranteed $100,000 capital raise. There are 3 revenue streams that come from that, and we'll split them all 50-50 or better to your benefit. 2,500 split 50-50, 9.5% capital raise split even better than 50-50 to your benefit, as well as the collateral assignment. Okay. So, and again, if you have questions, comments, concerns, you can drop them into the Q&A box and we'll work on those in a moment. All right, so we've covered the purpose and the structure of version 2.0. We've covered the branch compensation payout and the process associated with the branches. And again, if you're an affiliate, you would still do 2A. You would still keep half of it, so you're still making great money as an affiliate. As an affiliate, you don't earn 5% of the capital raise, you earn 1%. So there's a difference there, but we have overrides for that. So if you bring on an affiliate, and even if that affiliate brings on another affiliate, there's overrides on 2B and then 2C we've discussed. All right, so now let's get down to the implementation process. This is crucial. This is crucial. This is crucial that you understand that we have a structured and accountable system to implement. And we're going to hold ourselves to the nth degree for accountability. This needs to be clean and customer oriented. And then we need you to have that same mindset. So let's go through it and we'll address questions. So this all starts with 3A with enrolling the client. Now we're launching the new replicated websites today, but it's going to look similar to the Capital Ready package. It will not be labeled, it will not be on the Smart Money Alliance domain, so it'll be essentially more of a white label approach. But the bottom line is it's the similar content. We need to get the client's information put into that form. And I can show that to you in a minute if you need. 3B is you're going to go ahead and collect that $2,500 or whatever portion of it that you want to collect. If frankly, if you don't want to collect anything up front, if you want to defer it all, that would be your choice. If you want to defer or discount it by $1,250, that's your choice. However, regardless of what you've chosen to do creatively on 3B, 3C still stands. You're going to go ahead and submit to us $1,250. So we can go implement the client. And so you can send that in via wire, ACH. Some of you just go directly to Chase. We have Zelle. There's a number of different ways that you could submit our half in. So then that takes us down to 3D. And I know this formatting doesn't look too good. I'm actually more competent in creating an outline than what this looks. But when I copied out of the email that we sent you from Post Affiliate Pro, it didn't retain any of the formatting. So I apologize for that. All right, so now the client is enrolled. You've collected the money that you want to collect from them, however much, how little, and then you sent our half in. So here we are now. We're rolling up our sleeves and we're implementing on 3D. So you see some very specific, bold words here, and we have set up systems in place. So these are going to progress through with an automated sequence. It's a beautiful thing. So day one, so now that the client's enrolled, A, B, and C is taken care of, what we're going to do is set up access to our cloud-based system so they can start to work on their business plan and financial projections. We have step-by-step guidance, we have tutorials, we have examples. It is grade A online resource for them. So we set that up, and then we're going to email them instructions that'll show in the CRM. So as long as you're a branch manager and you're doing what you're supposed to be doing, you can log into your CRM and see these steps, right? So it's no mystery, but separate from that tangent. So we'll email them access to the online portal to start working on their business plan and financial projections, and we will copy you on that. So you know that the client has been implemented and we're processing. So this should happen within 24 to 48 hours, 1 to 2 business days after 3A, B, and C are completed. But day one creates an automated sequence. So when I say like day 7 and 14 and 28, these are all programmed and automatic, just so you know. So here's day one, we get started. So we acknowledge them, and now we're implementing. Now let's take Rudy's client, for example. He implemented late Friday. We do need to send them the Docusign agreement to execute. And I guess I should have mentioned it in the trigger here, but we'll send that once they sign the Docusign, then day one starts. So day one starts once the Docusign is sent, and the Docusign is sent after 3A, B, and C is completed. All right, so then the system, the CRM, and so you'll be able to see this. You log in the CRM, you can see all the activity. Again, as a branch manager, you get free CRM access once you've submitted your initial deposit. If you're an affiliate, then it means you don't care about that, so you won't need to worry about login. So day 7 then is the second milestone. Now we're going to prompt them to complete their personal financial statement and soft credit pull. The soft credit pull, of course, is at no cost to them, doesn't impact their credit. That's why it's called a soft credit pull. So we can see how that important metric looks. And the personal financial statement is something that branch managers should be working with them on. Now, we're going to send them enough instructions, quite frankly, that they could do that PFS without you, but it's best if you help them do that. Now, you know that that's going to be sent out on day 7, and you're notified on this communication on day 1. So if I were you and I was being proactive, when you see this day 1 email go out, because you're copied on it, I would go ahead and schedule an appointment with them to complete the personal financial statement. We train you on how to do that, and it's part of the certification training. And if you need help with that, of course, Jennifer supports our branch managers. All right, so that's going to happen automatically on day 7. That's frankly going to happen no matter if they've done a little bit or a lot on the business plan and financial projections, because we need to keep this timeline going. And so day 7 automatically set up in the CRM, paid a consultant to create automation. That day 7 email is going to go out. Now, when they get that, it's going to say, hey, if you haven't created a personal financial statement in the last 30 days, let's go ahead and do it. And if you haven't done a soft credit pull with us, authorization the past 30 days, let's go ahead and do it. If you have visited with them and helped them complete their personal financial statement, which you really should be as a branch manager, then they're going to say, oh, I've already done that in the past 30 days. Check the box. So it shouldn't be interpreted as, oh, we just disregarded the work you've done, do it again. It's just if you haven't done it in the past 30 days. All right, so then on day 14, again, automated sequence, Scott, our programmer, is then has as it where we're going to then prompt them to go ahead and complete their key person policy. So an email is going to go out to them, and it will prompt them, it'll educate them about the standard operating procedures of the SBA. I mean, we give them the technical legal links so they see, yes, this is legitimate, this is what it does, this is what it's needed. Now again, as a branch manager, or frankly even as an affiliate, if you're life licensed, you know this is coming, right? So you could be proactive. Once you've helped them finish their personal financial statement, you can go ahead and be ahead of the curve. But we need to protect ourselves in case one of our referral partners isn't actively doing what they should do, so we're still moving the client through. Okay, so now let's go on to day 21. And again, on day 14, we'll train you and support you on how to properly set up those policies, because they need to be set up correctly. We've seen so many times clients will go out and they'll get a policy that doesn't work. So they've wasted time, they've wasted effort, and a lot of times they've wasted money, and then it's not set up as the lender or our lenders require. Okay, moving on to day 21. So now the final of the 4 emails for this, and just so you know, when we're talking about this, these are the same instructions that would go out to one of your clients if they're just in the 4-week access to capital. So this portion is the same. 4 weeks divided into 4 tasks, starting on the business plan, financial projections, PFS soft pull, key person policy, and now we're to the 4th email that goes out, which is going to say, okay, great. Now it's time to put everything together. And we're going to create a specific Dropbox folder. We pay for the Dropbox business account. They don't have any cost. And that's where they're instructed to upload all of their files. We have some of you that have clients that try to give us alternatives. No, we need to upload them all into that specific location because we're handling too much volume. What we want are great customer experiences, positive customer reviews, happy distribution partners, funded clients, and efficiency. So this system is set up to do that. So they don't need to be emailing us a bunch of attachments that's prone to getting lost or getting stuck or not being delivered. So instead, we have a specific Dropbox folder. So when we get to the 4th email, we'll give them a list. And so you might ask, well, what are these other support documents? So for example, if their business has been open, we need the last 3 months of business bank statements. If their business is brand new or doesn't have a bank account yet, of course, there wouldn't be. We understand. If the business has been open, then we need the last 3 years of business tax returns. Again, none of that is to say, oh, if you don't have that, I'm sorry, we can't help you. It's just we need to gather the data. That's the point here. We're gathering the data in a very efficient and consolidated approach. For those of you that were around when we had Capital Ready Package version 1.0, in the old model, we had a 10-step process, but it wasn't compact enough. And so it would drag out and people would get tired and frustrated and wouldn't finish it. Here in 30 days, bam, we've got it done. You might ask, well, can they get it done in quicker than 30 days? Well, they're going to start on day 1, and day 1 can't get any earlier than day 1, right? But if you're helping them, because you know what's coming and you're trained on it. So if you want to go ahead and instruct them to do the PFS and the soft pull in advance, and then you should be getting their key person policy set up in advance. The emails are still going to go out on that time-based sequence, but you certainly could accelerate. We're usually using nationwide for the key person policies, and so depending upon the client circumstances, there may be fluids involved, not fluids involved, and that could affect it. But the sooner that you can get these first 3 steps done in the 4-week window, that's preferable. So 4 emails, and this is the 4th one. So then at that point now, we have the ability to go into that Dropbox that we invited them to. We have all the documents. And so our committee meets typically on weekends, so we don't have the distractions. We had a committee meeting this past weekend, and we're on the phone with a couple of you going through, okay, here's the findings, here's some questions, what are your thoughts? And so we have some great team players. But for example, I was talking to one of our top producers and one of the clients, and it was like the PFS doesn't add up. What the client's saying and some portions of their loan package is inconsistent with the other. So our committee may contact you and say, hey, can you help us, Bruce or Beth or Barry or Ashley or Antonio? Can you help us go through this a little bit because we're seeing some inconsistencies? But the bottom line is, within about a month, we should have all the data collected, and we should be able to go ahead and do a review and decide, how do we get the client's first tranche of funding? And again, we all have aligned incentives, right? The sooner that we can get them funded, the better. The more money that we can get them funded early in the process, the better. But none of this replaces the need for the client to be matched to the right type of capital and to meet the underwriting criteria. That's the beauty of the Capital Ready Package version 2.0. We're not just taking them where they're at, we're going to help them improve their circumstances to get them to where they need to be. Some people can go full bore right away, some it's going to be more of a journey. We won't know that until we built the loan package out. So our goal is around day 30 to apply for the first tranche of funding. As you might expect, just because we apply for funding on day 30, that doesn't mean that the money suddenly hits their bank account on day 30, right? There's going to be a little bit of a cycle time. If we're going after a SBA 7A Express loan, that is typically 14 to 15 days. So that would push us out to around day 45 in the process. Some of the other funding sources are quicker. Some are longer, but it just has to be matched to their circumstances. So once now we've gone through, we built the loan package, we have the first, at least the first round of capital applied for. Now we can continue, we can take a breath and say, okay, great, got some money coming in, hopefully. Now let's talk about what changes we need to make to your profile to help you qualify for your long-term goal. And that might be tweaks to business credit, personal credit, or what have you, whatever else is impacting their qualification for their end goal. So we'll keep working. And so I know everyone wants the fewer number of tranches of capital is the better, and that's fine. We're focused on EIN-based funding, as we talked about. Typically, these are going to be loans, not credit cards. Some people will qualify for the fast track business credit build, and that might feed into their strategy, but that's not really what this is about. And then lastly, once the client reaches at least $100,000 capital raise, then we refund their $2,500 deposit, but that's not a chargeback to you. So you kept $1,250 of that, but this here has no financial impact on you. So you're coming out even farther ahead. Now let's talk about the support model, and then we'll get to all of your questions, comments, and concerns. We are paying you, you're receiving, however you want to word it, $1,250 for bringing a client on. And that should include you having 5 scheduled either calls, in-person meetings, or Zoom webinars, however you and the client prefer to do it. And so you might say, well, wait a second, what am I doing in those 5 conversations? You're just prompting them along, right? On the first one, because you're going to be copied on this email, right? So you want to go ahead and give them a call and say, hey, just make sure you see Smart Money Alliance just got you plugged in to the software, the cloud-based software, to start working on your business plan and financial projections. Make sure you get going on that. If you have any questions, let me know. Obviously, if you go through this process as well, you'll know it even better, but it's not required. And then in the second week, you're going to call them and say, hey, make sure that you're looking out for the instructions on the personal financial statement and soft credit pull. But again, ideally, you would take them by the hand. See, we want to provide more hand-holding with this model than we have in the past. And so you're the one holding their hand. You're the one making $5,000 to $10,000 for every client you're bringing on. And so you'll have probably about 5 hours of work put into that. But my gosh, man, that's the equivalent of $1,000 an hour, right? Okay, and so then you're going to also, so you're going to prompt them essentially through these steps is what we're talking about. And again, if you're a branch manager in good standing, you'll be able to go into the CRM and see where they're at. But it's really as basic as, okay, have you logged in? Have you started working on your business plan, financial projections? Okay, let's get together and put together your PFS and authorize the soft pull. All right, let's go ahead and get your key person policy set up. Okay, you need to take that Dropbox folder invitation you received and upload all those support documents that you have. And so it's really not very painful at all. I think the way we left the conversation on Friday, there was a little bit of a shock of, uh-oh, I have to do something, I have to implement, but it's not that much. Now, if you are a branch manager, you should be competent and capable of doing this. Jennifer is our full-time W-2 employee. She's our education coordinator. Her responsibility is to work with you and support you through this. And so if you're calling me or emailing me, you'll quickly become very frustrated because I have other responsibilities. My primary responsibility is getting clients funded. Jennifer's primary responsibility is talking to you and supporting you as our branch managers. So the clients will talk to you, you'll talk to Jennifer as needed. But to go through this sequence, it's not very complicated at all. It's just a simple process. And I mentioned, as long as you're a branch manager in good standing, you have access to the CRM so you can see what's going on as well. Now, when we have, I'll use this term respectfully, orphaned clients, clients that didn't come through a branch, maybe they just came to us directly or what have you, then Jennifer is not working with the clients, because remember, Jennifer is working with our distribution partners. Then April, also W-2 employee here full-time in our office, works with the individual clients. She's going to be working with them on the same process. So the internal process that we're going to follow, which we'll be having an implementation meeting today with our in-house staff, is the same as this conversation that we just had for you all. Okay, so what I'm going to do is stop the share for just a second. I'm going to navigate over to the correct page on the website. And again, if you have a replicated site, it's going to look slightly different, but the content will be much the same. Capital Ready package on Smart Money Alliance. So now I'm going to dig into the questions that you all have. Okay, so let's see. Monique asked, will Capital Ready 2.0 replace the SBA Express program? No. I think we're locked and loaded. I don't envision any other changes. The SBA Express program will remain. The Capital Ready package is here, and they'll both coexist. So our hope and our expectation, that's part of the reason that we waited to launch the new set of replicated websites, is we wanted all this to be stagnant, to be stable, to be consistent, and that's where we're at. So no, Monique, I don't see any changes to the SBA Express program. Thank you for asking. Beth says, good morning, Thomas. Good morning, Beth. If we decide to allow the client to do a payment plan, the process of getting started doesn't kick off for them until at least 1250 is submitted. That's right. And so as I described on that prior screen, once you have submitted 1250 to us, then we're going to send them the Docusign. They're going to execute the Docusign, and then we're going to implement. And until that has happened, then we're not executing the contract with them and not implementing. But I guess the point, Beth, is you could do a payment plan on just part of it, not all of it. But I guess you could set up a payment plan on the entire amount if you wanted. Thank you, Beth. Yep. So Toussaint's asking, can we help people in open bankruptcy? Absolutely. Process is the same. Toussaint's asking about different funding sources. So when we talk about the capital ready package, the key here is we need to look at the client's mitigating circumstances and identify the right source of capital based upon their circumstances. And so it sounds like Toussaint has a client or a number of clients that are in open bankruptcy. So that will impact how we go about raising capital for them, because some sources of capital, frankly, are not available if someone has open bankruptcy, but others are. And so having an open bankruptcy or a very, very, very low credit score does not preclude someone from enrolling or having a $100,000 guarantee. But obviously their circumstances can change the capital raise plan. Okay. Ashley says, can you share this document with us? Yes, ma'am. I sent it out to everyone this morning. So if you're in Post Affiliate Pro, that went out this morning, and I copied and pasted it. The formatting didn't turn out too good, but yes, Ashley, you should have that. And you can always get with Jennifer if you need more assistance. Okay, let's see. Tony says, is there any document we have the client execute concurrent with us collecting the $2,500? Well, what we're going to do is send them the Docusign. Now, if you would like us to, and if it's easier for you, that's okay. You can go ahead and fill out this form here. So you'd put in the client's name, their email address, their telephone number. Click that top box, and you could put in a message. And so Tony might say, I will collect $2,500 after Docusign is executed. And of course, put in Tony's name down here. And so then you could submit that in. And so we could pivot that order if that would help. So that way the Docusign is going to them, they execute the Docusign, but it would be you collecting the $2,500 versus us. You keep half, forward us half, or frankly, you're forwarding us $1,250. You could keep whatever portion that you've collected that's above $1,250. Very good, Tony. Good point. Beth is asking about the practicum. So on the training, career opportunities, free certification training, and there's a PDF here. And we'll probably add today's training to this just so everyone's clear on how to properly onboard and implement capital ready clients. Yes, ma'am. Toussaint asks, does the key person policy relieve the necessity of a strong personal credit profile? Well, the key person policy is a required element for most business loans, but it's not really a substitute for other elements, credit or otherwise. It's just a standalone requirement. And again, the purpose, most of you know this, but the purpose is real simple. You know, the lender is going to go through an underwriting process before they loan money to someone, or an investor before the investor invests money into a business. So the source of the capital has decided, yes, they want to inject capital into the client's business. And so they've made all the decisions based upon their required underwriting. But with that being said, what can't be accounted for is if the borrower dies. And if the borrower dies, what we know is for most small businesses doesn't have a strong enough succession plan in place. So those small businesses almost always fail. And the lender or the investor doesn't want to have that exposure. So I think the answer to your question is no, Toussaint. What I'm describing with the key person policy, it's an element of the underwriting for most sources of business capital, but it's not in lieu of some other variable. And Dion's not with Nationwide. So again, for the capital ready package, you can write the key person policy through your own hierarchy if you want, and then we just do a 50-50 split, just like we're 50-50 splitting the other elements of the funding coming in, or you can get set up in our hierarchy and then you'll make 100%. through us. But that's your choice. And if you're not life insurance licensed to sell a key person policy, that's fine. No requirement to be. If you want to become life insurance licensed, we've got some resources and some people that can help you with that. But there's no requirement to. You're not going to make the money off of that revenue stream legally. You can't be paid off of insurance proceeds if you're not life licensed. Okay. Toussaint's asking back in performance fee. Yeah, sorry for that. So the Capital Ready package is 9.5% performance fee by default. Now, if you want to discount it down, Toussaint or anyone else on the call in the training, you can, right? You can reduce the performance fee to the client all the way down to 5%, because we're paying out 1% to the regional director that is overseeing your branch, and maybe you're the regional director. And then, of course, we need to make a little bit of scraps to operate off of. But if you wanted to give up your 5 points, well, I guess you could discount it down to 4.5, right? Because it's 9.5% performance fee by default. 5% of that was earmarked for you. If you don't want your 5, then you can, it's called a rebate. We'd still charge them the 9.5. We're going to have standardized contracts, but you could rebate them 5 points, and they might love that. But that would be up to you. Vincent's asking, can we copy on all the emails? Well, the systems aren't quite set up to allow for that automatically yet. I don't disagree that that's valuable. You'll be able to look in the CRM and see the emails that have gone out. But certainly that day one email is the most crucial, because now you know that the process has started. Tony asks, what about cases when the clients already have their own agent for their key person policy? Well, we're responsible for making sure that that policy remains in force, because it's a collateral assignment for the loan. And we don't have the bandwidth to chase after 1,000 different insurance agents that we may or may not have a relationship with and juggle all that. So yeah, they may have their own insurance agent, but if they're using our program, they need to be compliant and have a collateral assignment that will work. And preferably that would come through our hierarchy, or if not, it can come through yours. But yeah, it doesn't really matter to us if they have their own insurance agent relationship. We need to have a turnkey system that is efficient and effective. All right, so Dr. Austin asks, will the commission of $750 be dropped on the new Capital Ready 2.0? I don't know what that means, and I'm sure it's my short memory, not your misunderstanding, but I don't remember anything that I've said about $750. So Dr. Austin, I apologize. I don't know. I don't know what you're asking. Maybe you could restate it. Okay, so Toussaint asks, so how does the ICS team's expertise get applied to heighten the success of achieving funding? The role of branch managers and affiliates seems rather limited in this model. There must be some advantage of clients having a relationship. Oh, well, yes. So, and that's a great question. And it boils down to, if a client asks you, well, why should I do this? Why should I enroll in the Capital Ready package version 2.0? They won't know about 2.0 necessarily, but you and I do. So why? Well, number one, we guarantee at least $100,000 capital raise. Number two, we're going to put together the variables that allow you to reach the optimal amount of capital. So rather it be putting together the lender compliant business plan, financial projections, the collateral assignment, the personal financial statement, building your business credit profile, your Dun & Bradstreet, your Experian business. If you need help improving or optimizing your personal credit scores, I mean, we're looking at the client very holistically and helping them get from where they are to where they need to be. And then we're also matching them to the right source of capital based upon the right circumstances. In many cases, we have close working relationships with the lenders, which doesn't mean that someone will get approved because they came through us versus not. But we do have, in many cases, we have a better ability to work with the underwriters to address any deficiencies, get those corrected, and get those in for resubmission than a person off the street would. So ultimately, it's a pretty snazzy turnkey model. I don't think that you're going to face too much pushback, Toussaint, because there's 28 million plus small businesses. Most of them are desperately wanting and needing capital, and that's impacted by two primary obstacles, right? They usually don't know what the right type of capital is for their circumstance, and secondly, they usually don't meet the underwriting criteria. That's what we're resolving. That's our value proposition. Barry's asking about on version 1.0 clients. And so on 1.0 clients, that's right. We need a loan package for them too. It just wasn't packaged smoothly into it. But all those clients that are in 1.0, yes, I would recommend that you get them over here and you get them in the 4-week access to capital program. That's going to take them through the same step, many of the same steps that we just talked about. And that way we can get them on track. We need a loan package if we're going after loan funding. So that's exactly right, Barry. Get them over here and they can do this and get going. Thank you, Barry, for asking. And Loopy's asking, yeah, so if you enroll clients in, Loopy, even as an affiliate, you'll be doing the same things that I described. We would prefer that you be a branch manager if you're going to offer the capital ready package, but at this time it's not a requirement. So the payout that we went through would be just as we described, Loopy, with the exception that you get 1% of the capital raise, not 5%. But everything else that I showed you would be exactly the same, Loopy. Great question. Monique, no other changes. Now we have everything in place, and it's all going to be here on the Smart Money Alliance platform. And yeah, Joseph's asking, Joseph's one of our regional directors. Yeah, Aristotle is, I'm going to take over the primary role of visiting with prospective branch managers. Aristotle has been overwhelmed. He's trying to get some help. I think he has 17, hopefully I'm not misspeaking. I think he has 17 key person policies to write today. I mean, he's drowning. He's desperately looking for more insurance agents to help write these policies. So he became much busier with that than we ever thought would have happened. So yes, Joseph, or anyone else, if you're a regional director and if you have any prospective branches, I probably need to talk to them. I don't think Aristotle has the bandwidth, and we'll make a formal announcement of that here soon. But if you're a licensed insurance agent and you want to be writing 100 policies a month, Aristotle's the guy to talk to because he can help you generate that type of volume. Thank you, Joseph. And Monique, you're exactly right. And we did that for Rudy's new client this morning in version 2.0. It had the content. Yes, we acknowledge that you've already paid $2,500. We actually mentioned Rudy by name, and we copied him on it in the Docusign. But we recognize you've already paid the $2,500 refundable deposit into Rudy that's been credited to your account. So yes, ma'am, we're doing a better job of clarifying that. Wayne's asking, the key person policy is also done on a split. It's up to you. You can do it on a split. And you might say, well, why would I split that? Well, we're splitting all of our income 50-50 with you, right? So it all has to be in equilibrium. We're giving you $1,250 of the $2,500. We're giving you 5 points of the capital raise. The key person's an important part of the funding, and we're making it easy for you to sell that. So it would be a 50-50 split on it as well, unless you want to write through our hierarchy, and then you keep 100% of it. That's your choice. We had a guy called in, talked to Aristotle actually on Friday, I think Thursday or Friday, and he's like, well, I don't want to write through your hierarchy. I already have a hierarchy. He's like, great. If that's working for you, then that's fine. We just do a 50-50 split. The conversation went on, And, we asked the guy, how many policies are you even writing a month? He's like writing 2 or 4 policies a month. It's like, okay, if you used our system, you'd be writing that many in a day, but it's all about whatever you prefer. We don't want to pressure people to do things that they don't want to do. Let's see, Mike asks, what about those onboarded just before this 2.0? What is the way forward with the Smart Money Alliance? I don't understand the question, Mike. I think it's a good question, but I don't think there's enough meat on the bone for me to understand your question. So if you can retype it, I'll answer. Oh, Ashley, great. I'll make note, Ashley, to reach out to you today. She's willing to help write some of these policies. Thank you. I mean, it's pretty streamlined. It doesn't take a whole lot of time per client, but the volume, we need some more writing agents. Rudy asks, can a client purchase a home with this plan? Yes. Let's see here. Barry asked, do we need to onboard the clients in the capital ready pack? Oh, 2.0, okay. So that's a good point. In 1.0, you went in and you filled out all the forms in the CRM. That would be redundant. So now what we're doing in 2.0 is we're building that loan package out in month 1. We're getting that done right away. Where before that was delayed because we were doing an interim round of capital before we did the loan package, and that didn't work as well. So Barry, thank you. So no, you do not need to go take them through those 5 pages of questions in the CRM. Instead, what we do now is more valuable in actually building out the loan package from the get-go. Thank you for that clarification. Dr. Austin, I think, is following up on the question I had for him earlier. He's saying on the old version, there was a $750 commission on the $2,500. Oh, okay. Yeah. Now we're doing a 50-50 split. Thank you. Yeah. On version 1.0, there is a $750 payout. Now it's $1,250. So the client has the same payment, the same payout for the refundable deposit, but now you're making more of it. Isn't that great? Toussaint says, I don't have much of a background in finance, so how would I help a business with its financial statement, let alone a PFS? Well, a PFS is a personal financial statement, and we've trained you on how to do that. When you go through the certification, career opportunities, and this training is free to everyone now, right? We all know that we got the workforce grant, and this training is now free to everyone. And so you click on here and you work with Jennifer and you get certified, you go through that training, and we train you how to do the PFS. And so, yeah, it doesn't matter how strong your financial background, once you go through that training, you'll be able to do it. Should be able to. All right, McLynn asks, not sure if you've addressed this. What's a good point to address the performance fee? That's a good point. So when do we bring that up to the client? So first, what I would be doing with the client is identifying what's the problem, right? What is the issue with your business? Well, I need capital. I want money, they might say, instead of capital. Well, what do you want that money for? How much money do you need? What's your plan to raise that money? So you're being seen as a listener and being thoughtful and considerate, but ultimately you're looking for the right pivot point to say, hey, I don't know if this is a good fit or not for you, but I am working with a nonprofit that has a grant subsidized program, guarantees at least $100,000 capital raise. Funding normally will start in the first 30 to 45 days. It is strong. And with that, there is a deposit that you pay when you enroll. I can work with you a little bit on that, but there is a deposit. It covers the development of the loan package. Normally a loan package is $5,000 to $10,000. They're doing it for less than half of that. And then instead, all the reward we have for helping you is based upon the results. So by helping you raise the capital that you want, then we get a small piece of that, just like a realtor would get for selling your house, right? It's very natural. And so then they might ask McLean, well, how much is that? And you'd say, well, it's just a little bit below the industry average. Industry average is about 10 to 12%. And through our grant subsidized program, it's 9.5. And so let's get started, right? So something like that. Tobin asks, can a business get funding in less than 30 days if the paperwork is complete? I'm going to answer that two different ways. And I guess the simple answer is yes. But as I described, we really have a 4-week sequence built, a structured sequence for building out the loan package. And so I want us to be conservative in making commitments to clients that we may not meet. So I would just say in general, we're going to need about 30 days to put together your loan package and get all the elements necessary. And then our goal is to get funding in that 30 to 45 day window. That would be the most consistent thing to say. Could it happen sooner? Yes. Robert's asking with the Docusign. Yeah, the Docusign is almost exactly the way it was under version 1.0. We waived the enrollment processing fee, right? They were paying $499 under version 1.0. We got rid of that because people hated that, and they had two bills to pay right away. But it's almost entirely the same. Vincent's offering to help write some policies. I'm going to add him to the list, along with Ashley, and get the email out to you all today. Thank you, Vincent. All right, let's see. Kwong asks, what are the requirements, if any, for applying to be a key life insurance key license career? Kwong, I didn't understand exactly your question the way that you worded that, but I will respond to you afterwards in writing. Mike asks, what happens to clients that are enrolled in 1.0? So if they've enrolled and they're contracted in 1.0, they're in 1.0. Now, we're still going to go build using, if they're in 1.0, and someone asked this earlier, I forget who it was asked, but what we want to do is build their loan package as soon as possible. And so what you would do then most likely, Mike, is say, okay, we need to get your loan package built. And again, we're talking about 1.0, the prior version, the legacy model. Educate them on this, and let's get them plugged into this so we can get them through that 4-week curriculum. 1.0 wasn't smooth because they would enroll, they'd have a processing fee, and then we'd turn around and either ask them for the refundable deposit or to enroll in the 4-week, the $499 payments. And that just wasn't palatable. Now with version 2.0, we've eliminated the processing fee to save them money and to have just one transaction. Thank you for that. Oh, Rudy's offering to help write some policies. I'm going to add you to that, Rudy, as well, to the list. So I got Ashley, Vincent, Kwong, and Rudy I need to follow up with. Thank you. Toussaint's asking about the typical upfront premium on the key person policy. Well, when we set up a key person policy, it really needs to be an annual premium. So instead of paying monthly, it needs to be the first full year needs to be paid in advance. Lenders, if not require that, strongly prefer that, because if let's say that they paid this month and then they didn't pay next month, now they're in default of their loan, and that loan could be called due. They could owe that entire $100,000 next month if they didn't keep that key person policy up, because it's creating exposure for the lender and the borrower is not complying with the terms. So first part of my answer to you, Toussaint, is in most cases, it's going to be an annual premium. So they're going to pay whatever the monthly premium is times 12 up front. How much would that be? It's going to vary based upon the mortality risk of the individual. In other words, if you're older, your insurance cost is more than if you're younger. If you're sicker, less healthy, your insurance costs are more expensive than if you're healthier. The bigger amount that we need based upon the collateral assignment. So there are variances based upon that underwriting. In general, and then also the way that the product is set up, there's term policies and whole life. I think in general, you probably need to budget for $100 to $300 a month would be a normal range. If we want to put some more bells and whistles on the policy and maybe make it as part of the retirement program as well, then it could be on the higher end, but then it's building cash value. So there's some variances there, but I think to answer your question, they would anticipate having at least $1,200 up front. Now you might say, well, that's a problem. Well, I can tell you, when we leased this office here, the chamber is our landlord. We had to go get a policy, frankly, not a key person policy, but a P&C, property and casualty policy. And it was about that amount. It was like $900 that we had to pay up front for that policy for a year to be able to lease our space. So there's going to be insurance cost with doing business. And if someone is so void of cash, we may need to look at some other options for them to get the wheels turning. Robert's also interested in helping write some of those policies. All right, Robert, I'll reach out to you as well. Thank you. Bruce as well. Let me add you to the list. We're running a little bit long here. I apologize. Regina says, oh, she's on board to assist. Great. So Regina, I will put you on the list. I appreciate everyone being willing to help. It has become quite the burden right now. Let's see. Oh, Michael Richardson's going to help. Got my list going here. Let's see if there's any other questions we need to address. And Dion's going to help. Great. That'll add another 10 or so of you. All right. So thanks for your time. The goal today was to kind of roll up our sleeves and understand the implementation of the Capital Ready Package version 2.0. It is our flagship offering. It's what we're going to focus on. All these others are going to stay the same. And I guess I would close with saying, think of this in terms of having a low and a high option. The Capital Ready package is kind of the Cadillac package with the $100,000 guarantee, helping them improve and optimize business credit, personal credit, and those other variables. If that just doesn't fit within their budget or their preference, that's okay. Then just drop down, bring them in the 4-week access to capital program. We can get them started here. Only $99 up front to get started. We'll build the loan package out. We'll do the capital match. And if it's a good fit and we could help them with their capital raise, at that point, we could then introduce to them the Capital Ready Package 2.0. And we would credit, of course, what they've paid here to the CRP at version 2.0 if they upgrade. All right, we've covered a lot of information. Thank you for your time and your patience. The key is we need to implement. So let's get out there and make it happen. We'll see you back here tomorrow. Bye-bye.